Welcome to Charts Today. My name's David Linton, and today's edition for Friday the 12th of October comes to you from London. And what a week it's been. Markets really have been in turmoil. US falling further last night, but it does look like we'll recover for the end of the week. Probably quite a lot of bear closing going on, but we are seeing Asia recovered overnight, and Europe is up on the futures this morning. Taking a look at the dollar first of all, we see the dollar index has been falling away. The medium-term chart is still sitting relatively flat and holding its bull position, but short term we are bearish on the dollar. And looking at the euro, we're seeing the euro actually has had a strong week, rising higher, so that's pretty key for the euro as well. Japanese yen is showing the dollar weakness, and that's been sitting there now for well over a week. It tends to show up first on the yen, so we're just seeing that dollar weakness becoming a bit of a theme. Sterling rising on that weaker dollar and on the verge of breaking to medium-term bullish, possibly finding some long-term support. Looking at sterling against the euro, we see here it also is bullish, holding its position, just falling away a little bit this morning, but still holding its short-term bullish position. Against the Swiss franc rising as well, and against the Aussie dollar also looking strong. Bitcoin up nearly 1%, but having fallen away yesterday, it's small consolation, still looking pretty bearish. The US market last night, the S&P 500 index was down a further 2%, so that's put us below the cloud on the lagging line, although we like to see a few days below the lagging line to say a transition has occurred. So if we bounce back this morning, we could still be in bullish territory, but no question we are short-term weak, and we need to get back above 2,900 points really, so some 200 points higher on the S&P 500 index to back into bullish territory. Looking at the Nasdaq, also bearish below the cloud now in the short term, and the medium term chart is actually also looking pretty bullish. We've got a downside target of some 8% on the Nasdaq on the short term, and that is a lone target, of course, so it will be key to see other targets building. The Dow is also looking pretty bearish, just on short-term support here on the point and figure chart, and no long-term downside targets yet. So still too early to say that the market is more than just a correction. We're almost likely to see a move to a lower high and then a lower low to confirm that this is the beginning of a new bear market. So for the moment, no clear indication that we've got a lot further to fall. Interestingly, the Russell 2000 index has been bearish for the last few weeks, and this is turning clearly bearish, and we are seeing that smaller capitalization stocks in the US did sell off more widely yesterday. Looking at the futures, the S&P futures up over 1% this morning does suggest that the US market will rally today, closing the week. Still lower, almost certainly lower. The Dow's down some 6% this week, but it will recover some of this ground. And the Nasdaq E-mini up 1.4%, so there's a very strong showing on the futures. The FTSE future, we're not open yet in London. The FTSE future is up some 0.5%, still very bearish on the charts. And of course, if we do fall lower, that activates a further downside target, some 4% lower. But for the moment, the FTSE is indicating that it will open higher. Here we see the cash index, and it's looking very bearish indeed. But again, a shortage of clear downside targets is making it hard to call, and the future is pointing to up this morning. FTSE mid-cap looking also very bearish, and so we've got further long-term deterioration here as well. Taking a look at the Xetra DAX, the DAX is down this morning. The future, this is down yesterday. The future is actually indicating 0.7% rise, so we will see that open higher. And the CAC Quarant had a pretty bad day yesterday as well, down nearly 2%, taking us to a very clear bearish territory on the medium-term chart. But again, a shortage of downside targets. Looking at Tokyo, we see that it recovered towards the end. It was down quite heavily in the day, but recovered towards the end, as did the Hang Seng. It was down significantly and managed to close up 1.75%. And the Chinese market, which is the market that we've been most worried about, um, did actually recover from as much as 5% lower. But what is and you see that sharp recovery just towards the end of the close there. But what is interesting on the Chinese market is we're now making 4-year lows, and we have activated this downside target some 44% lower. So this is really significant that the Chinese market has now broken that support level, and so we do expect to see Chinese stocks going lower. The Indian market was up quite sharply as well, but still bearish below the cloud on the medium and short-term charts, and the Aussie market recovered only slightly. Taking a look at crude oil, Brent crude has had a very tough week, falling away from the mid 80s back to $80. We touched $80 last night. We've recovered this morning. We're up some 1.3%. So the key thing will be, can we make new highs? If we do make new highs, we activate a new upside target of $122. So that's very significant indeed, if we can break to higher levels. WTI doing much the same thing, of course, bouncing off the $71 level this morning, up 1%, not quite as strong as Brent. US nat gas has held quite strong through most of this turmoil, sitting at $3.26. Has just turned a little bit bearish below the cloud, but still sitting at levels that we haven't seen for several months, the sort of high points of the year. Taking a look at gold, gold was up quite sharply yesterday. We touched $12.25 at one point. That's given us a new upside target of 13.02 if we can move higher, some 7% higher on gold. So we may be seeing the beginnings of a turnaround for the gold price. And if we look at silver, silver of course also bullish, so short term now, so that's also looking good. US 10-year yields sitting at 3.18%, so we are just still holding the bullish position that we've seen in the last few weeks, but short term we've just moved back below the cloud, so we are just seeing that kicking in. Bond yields up, which means bonds down, so we are seeing the German bond market just the bond down this morning, just under 0.2%. If we take a look at the stocks, last night we saw some pretty big moves in the Nasdaq. And just looking at the best performers, we can see here a small percentage of performers were strong. Facebook actually was one of those, up 1.3%, but very bearish looking charts now for Facebook. Looking at the other side, the bearish contingent was much higher, and we had stocks as low as 5%. So quite a lot of stocks underperforming the index, of course, driving it lower. And if we look at just some of the bellwethers, taking a look at Apple, we see here that Apple were down just under 1%, so fared fairly well given the fall away in the market. Google didn't fare so badly, but the chart is actually looking pretty bearish on Google. Amazon, and here we see the relative performance. Amazon's outperforming some 35% still this year, although we're just now on support on the lagging line on the chart, so that's quite key. Taking a look at some of the other stocks, Tesla was down nearly 2%, so we are just testing this 250s area, which is quite key. And really one to watch. And Netflix, of course, has been a pretty poor performer of late, although it still has outperformed the market some 50% this year. Really had a great start to the year, but it's just come back. And we're seeing that across the board. Stocks like Nvidia had a pretty bad day yesterday because they've been an incredible riser, and that's just putting Nvidia to the first time in a while into a medium-term bearish position, so one to watch. That's it for today. Until tomorrow, happy charting. See you then.